For those that have not met me yet, I am Michelle Shanks with Summit Credit Union, and we are here today to talk about tips to improve credit scores. I have been with Summit Credit Union now for 16 years, even though I've been in the banking world for a little over 21. It is something that I enjoy doing because I love giving information. Information is power. So I love being able to do that so that you can have the financial tools that you need to make the best decisions for your life. So I love giving the information away, as I say. Today, we're going to cover a few things. We're going to cover uh, what makes up a credit score, uh, go over a few pieces of terminology, when to check your credit report, things that affect your credit report or your credit score, whether it's positive or negative, what could affect your wallet, as well as some to do items. First, let's dive in. What is a credit score? It is basically an algorithm that is introduced from the three major credit bureaus here in the United States that tells about a person's credit worthiness. Whether you're trying to get credit or if you already have credit and you're trying to do other things, it allows those lenders or employers to see how you're managing your credit. So, whether or not you consider that good or bad, that's what it's used for. Those three credit bureaus, Equifax, Experian, and TransUnion, you have the right to have access to your credit report for free. You don't have to pay for it. You can go straight to annualcreditreport.com and go to all three bureaus annually. So you can do them all at the same time, or you can do one every 4 months, or whatever makes the most sense for you. But you do have access to your free credit report. So I always like to let folks know that you don't have to pay to get your credit report. You can do it, uh, right through the bureaus itself. So feel free to utilize that tool. Go jump into what the credit score factors are. What makes up your credit score? Your payment history, the capacity that's used. So out of your what you're doing as far as your credit, how much of it are you using? So if you have a credit card that has a maximum limit of 10,000, if you're using all of that, then you're at 100%. You've maxed it out. But if you are not using it as often, say for instance, if you only use it to purchase maybe a $2,500 refrigerator, and then you pay that money's back, then it's showing that your capacity is nice and full and you're taking care of your credit. I always tell folks, if you do use your credit card, no matter what the balance is, no matter what your max is, if you're utilizing it and then paying it back on time, not just minimum payments, it really does help your credit score. I've seen minimum payments as low as $15. Most are around $25, but that's not going to help you pay that credit card back quickly, especially if you're borrowing thousands of dollars. So, as soon as you are able to repay that back, that is going to help your credit score and show that you're making your payments not just on time, but that you're not maxing out your credit cards. So, capacity is definitely a biggie when it comes to factoring in your credit score. Your credit history, what you're doing, how you're using it, what is listed on your credit report, all of that stuff is on there. The types of credit, whether it's, you know, auto loan, credit cards, mortgage, all of that is being listed, whether it's a fixed or a revolving credit, and as well as your past credit application. So if you've applied for credit somewhere, whether it's at a financial institution or you're trying to make a purchase, whether it's at Lowe's, Home Depot, some other financial institution, it's going to be listed on there, whether you get anything from them or not. Those inquiries are going to be listed on your credit report. So Just want you to know that those things are on there. But we also want to know, okay, what really is on my credit report? You want to know that, right? Let's talk about what is in a credit report. Of course, your personal data, your name, any aliases, if you've used other names, if you changed your name, if you've been married, whatever, all of those names should be listed on your credit report, as well as your current and previous addresses, along with your social security number. One thing that a lot of people may or may not know is your employment history is on your credit report. I always tell folks, whatever you're doing, just be honest. If you've applied for a job to be a rocket scientist at NASA, great, wonderful. Uh, and if you tell them that that's where, you go to a new employer and you tell them this is where I've worked before, your new employer is going to check your credit report. That's how that's basically how they tell what's going on with your life. So if you tell them I was a rocket scientist at NASA, that was my last job, they pull your credit report and it says that you were an accountant at a law firm, that's not going to match up. They want to know honesty. So just know your employment history is going to be listed on your credit report. Also, a summary of your history, the types of accounts that you've had, like I said, whether good, bad, or indifferent, if you paid on them, if you had slow payments, no payments, it's going to show whether they were past due or in good standing. Any other detailed account information is going to show how many times you've paid on your credit card or your auto loan. It's going to have some indications on there as to the type of payments that you're making. Like I said, inquiries of other places, those are going to be on there. Even if you've gone to 5 different banks for a credit card, it's going to have all of those inquiries on there. They're not going to stay on there forever, but they will at least show up as an inquiry. And details of any accounts that have been affecting you negatively, any liens, of course, non-payment, any garnishments, things of that nature, those are going to show up on your credit report. Soft inquiries and hard inquiries. Okay, we're going to go into a little bit of terminology here. Soft inquiries it's basically where you have inquired about getting something. You haven't signed on the dotted line yet. You've inquired, say for instance, an auto loan. You go to a dealership. You're thinking about getting this car. You've given them your social security number. They just ran a credit report. That's a soft inquiry. If you get the car, then that's when it becomes a hard inquiry. So those are the difference. The difference is you inquired, basically. You wanting to check to see if you can acquire that, those goods or services. Once you sign for those goods and services, it becomes a hard inquiry. Those do make a difference on your credit report. Soft inquiries are 5 points apiece. Hard inquiries are 10 points apiece. One tip, I love giving tips. If you are looking at making a major purchase like an auto loan or even a mortgage, those are the two biggies for most people. Go ahead and pre-qualify at your financial institution first. Instead of giving your social security number out 15 different times to 15 different lenders and having 5 points apiece taken off every single time, whether you get that goods or services or not. So go ahead, get pre-qualified. That way your credit report is pulled one time only. You will know your interest rate. You will know your payment, your monthly payments. You will know how it's going to affect your credit score immediately, and you don't have to do the runaround. I always tell folks, I don't care if you get your car from Car Gurus or Carvana, or you go straight to your credit union, or if you go to a dealership, go ahead and get pre-qualified at your financial institution first So that way it's pulled one time only, and you know all of the particulars. You know how much you're spending. Um, because you can pick your car out from anywhere you want. So that way you are more in control. And I've seen it happen. You go to a car dealership, the first thing they want to know is what's your your social security number. They may deal with 5 or 6 lenders at that one dealership. They're going to take your social security number and run it through every lender that they have to see who's going to take that car note. So that means if they have 6 lenders, that's 30 points off of your credit score immediately, whether you get a car from them or not. So if you've got a nice hefty 750 credit score and it drops down to what, 720, 710, and you're going, wait a minute, my credit score is good. Not if you have it run through all these lenders. Or if you're at you just made the 700 club, you got a 720 credit score. Whoo, you're going to get that good auto rate, right? You go to one lender, they've got 6. I mean, that one uh, dealership, they've got 6 lenders. You don't even get a car from them. You're just looking. They've run your credit report. That's 30 points off. Now you're back down to 670. You go to the next dealership, they're going to do the same thing. By the time you get a car, who knows what your credit score is going to look like? So go ahead to your financial institution, get your pre-qualified financing done, and that way you can choose your car from anywhere you want. You don't have to give your social security number to anyone else. So just my tip. Feel free to feel free to use it, but I like to make sure that people know what's really going on behind the scenes. Okay, so that's just me. That I'm sorry, I'll digress. I get a little passionate when it comes to stuff like that. But I'll tell you what's not in a credit report. Um, your race, color, religion, all of that stuff, marital status, none of that is in there. Your salary is not on your credit report. Your interest rates are not mentioned on your credit report. I don't care where it's coming from, it's not on there. And whether or not you're participating in a credit counseling service of any kind, it is not on there. Some folks are, I've heard people say, well, I'm with, this credit counseling agency, and they're taking care of all of my bills. Well, that's not going to show on your credit report. The only thing that's going to show is whether or not those bills are being paid. So be super careful who you give access to when it comes to things of that nature. So just a little warning there, because that is not going to show and it won't make a difference on your credit report. When to check your credit? I tell people as often as you need to. Um, Now there are apps out there so that you can check it on every day if you want to. So feel free to check it, but also check everyone in your home, your children, your stepchildren, the elderly. If you have mom and dad, and predatory lending is out there, scammers are out there. It doesn't hurt to make sure that no one's using their information. So feel free to check theirs if they don't mind, but definitely check your children. Right now, the two of the largest targeted um, groups of people for credit theft or identity theft: deceased and children under 15. Those are the two major groups. It used to be the elderly. Yes, they're still on the list, but right now, deceased. And unfortunately, that only became top of the list because of COVID. We had so many people, unfortunately, that we have lost uh, due to the pandemic, that has now kind of moved up in rank as far as identity theft. So just feel free to check your credit report as often as you see fit. Things to watch out for: be be wary of renter scams. I'll say since the beginning of the year, we've heard a lot of it on the news, where folks are advertising that this house is for rent. And when the people get there to move into their home, they find out that The person that actually owns the home never put it up on any site for it to be rented out. A scammer has gotten someone's money claiming they own that home, and they had nothing to do with that home. And so people are out of, number one, out of money, and now they're out of a place to stay. So please be aware that those scams are out there. Having loans at second tier companies, and I'll tell you about that in a minute, but also be aware of companies claiming to erase your debt. I mentioned earlier about um, turning your information over to a credit counselor. Be careful who that is, because if they don't make those payments for you as promised, then your credit report is not being repaired at all. So be careful there. Uh, Second tier finance companies are usually companies that have the word finance in them. They're not major banks, they're not major credit unions. They're basically the middleman, so they have to go to somewhere else to get the money that you're borrowing, and they're just collecting a fee. So be super careful. Credit bureaus are not huge fans of those second tier finance companies. They don't report as much as they should. And usually their interest rates are super high. So just be careful. I mean, if that's what you want to do, that's fine. But we just want to make you aware that that stuff is out there. Also, be aware of any lenders that do not report to the credit bureau. Some places are, there's a lot, and I use North Carolina a lot. There are a lot of places where you can get a car. I would call them the mom and pop places. You can get a car from, just about every corner. There's a little pop up, buy here, pay here place. They don't always report to the credit bureau. You may want to look them up and make sure they're BBB accredited. Just do some background checks on that company to make sure that they are legitimate and that they're going to do what's right for you and report what your hard-earned money is, your hard-earned money. So make sure that they're reporting that you're making your payments so that it helps you in the long run. And if at all possible, do not co-sign for a loan. Folks, especially my younger folks, I'm not as young as I used to be, but anyway, for my younger folks, especially my college age folks, do not co-sign for your roommate, because that loan is your loan. If they don't pay for it, if they don't make those payments on time, that's affecting your credit. It is hurting your credit if they don't take care of that obligation, or if they skip town, or if they just decide, I'm tired, I don't feel like it, then the credit that lender is now going to come for you to make that debt good. So just be careful who you sign for. So if you don't have to co-sign for anyone, I suggest that you reserve that for someone close to you that you truly trust. So if you can avoid co-signing, feel free to do that. That is not always an option, but just know that if you co-sign for a loan, that is your debt as well. Okay. Let's talk about what affects your credit score. As you can see, if you're late, it really can put a dent in your credit score. 30 days up to 90 days, you can lose anywhere from 60 to 90 points. If something is sent to a collection agency, automatic 30 to 60 points. Home loans, because that's usually one of the largest purchases that people will have, it is more as far as the points. So if you're late on your home loan, and late usually means the second payment, not the first 30 days. It's usually the second time around. If you're late for 2 months, that's when it starts to hit your credit report. That's 100 points. Foreclosures, bankruptcy, pet peeve. I don't know. I don't see them as often now, maybe because I just don't turn on the TV as often as I used to. But there used to be a commercial where a gentleman would come on and say, the best thing you could do for your credit is bankruptcy. No, that is not the best thing you can do for your credit report. And bankruptcy stay on your credit report for at least 7 years. So that's 7 years of bad debt you're carrying around. So that is not probably the best thing for you. If you have to do it, then that's a decision that you make. Please, please, please be careful in those decisions because that can affect you long term. But just know that those automatically, that's coming straight off the top. So if you are at a 700 credit score, you're dropped down to a 500 immediately. So just be careful. The best way to rebound on those points is to bring payments current. Getting back 65 to 75% of those points back. The rest are usually restored within 2 years. So as soon as you can get them current, that's going to help improve your credit score, help you get more points, and keeping that momentum going. Within about 2 years, you can recoup what you've lost. I always tell folks, you may have the credit score that you don't desire at that moment, but that is not your lot in life. You can always change that circumstance. So if your credit score is a 650 and you want to get it up to 800, you can do that. You can do that. Or if you've had medical bills or uh, divorce or some other unforeseen life circumstance happen and your credit score drops, that doesn't mean that's what it's going to be for the rest of your life. You can always rebound and get it back to where you want it to be. Things that can affect your credit score, I always tell folks that this is just kind of the surface. Getting into your personal, you can, we do what we call our credit score analysis there at the credit union. So we can do an individual credit score analysis where we can look at your credit report, go over it with you, tell you, what's on there, what's going on, and give you a path to improve your credit score. So we can do that at the credit union. But whether it's positive or negative, always tell folks it's not always about bad credit, it's about maintaining your credit. So things that can affect you, of course, derogatory or the negative information is going to have an effect, especially with bankruptcies. They can be on there for at least 10 years. So just know that there's a timeline. I always tell folks your credit didn't go down the tubes overnight, so they're not going to rebound overnight. There's always a time factor, and time heals all wounds. So you can always get a negative situation back to a positive. Most information stays on your credit report for at least 7 years. If you've co-signed for a loan, I've mentioned it before, then that is going to be reflected on your credit score as well. So how it's paid is going to affect your credit score because that is now your debt as well. Things that can affect your wallet. Insurance companies use credit scores as well. They use it to rate uh, your your services, and because especially insurance companies, all of their work is done on the front end, issuing the policy, um, making sure that you are covered with whatever coverage that you've chosen. The agency is doing all of that up front, but you're paying premiums, so they're only getting a little bit at a time over time to compensate for all the work that they did in the front end. So they look at that to see if your credit worthiness is going to give you the best rates or median rates, whatever it is that they're doing. So they look at that first. Employers, as I mentioned before, look at your credit reports as well in making hiring decisions. So if you're working at if you're applying to work at a financial institution, yes, they are definitely going to look at your credit report to see if you're managing your credit. But if you're applying to, work construction, it may not have a major effect on what that employee's decision is. So just depends on the job that you're applying for. But definitely a good score can help you increase your chances of lenders approving your loans. It is not a guarantee because lenders have their own criteria and they can say yes or no to anything. So, but it doesn't hurt to have a good credit score. It doesn't help you improve. Real world example. Let's take a look at a vehicle, an auto loan. Most are 60 months, 5-year loans. For the credit tiers, you can see I have been what is considered A plus, all the way down to E, which we call everybody drives. Talked about those mom and pop places, but look at the interest rates. And these are real world. I mean, right now, interest rates are super, super low. So if someone is uh, getting, have the best credit score that they can have, if say their credit score is 760 or 780 or 800, and they're getting the best deals, look at the interest that they're paying over the life of the loan. We're talking a $25,000 loan here, all the way down to the everybody drives. You could almost pay for two cars if your credit score is at the point where you're paying these kinds of interest rates. And right now in North Carolina, the average is about 24.95 for a used vehicle. So this is not unrealistic. Uh, but just think about how much interest you're paying and how much you could save. The difference from A paper to what we call A paper to E is almost $20,000. You can almost pay for two cars. So just think about it. If that's not motivation enough to have a good credit score, we're going to take another real world example. I mentioned before, two of the major purchases in the United States, usually an auto loan and a home. So let's take a look at a home and see if that is not a motivator for you. Look at the interest that you would be paying. Right now, rates are lower than this. A 30-year right now could be as low as, 2.5 or 2.75. I've seen some really low rates right now, but on average, if you're at a 3% or 4% or 5%, that's a really good rate. But for folks that are at 9.5 and over, you're just looking at a $250,000 home. You could buy almost two of those just in interest. So it does help your wallet to have a better credit score so that you can get a better rate. That's going to put more disposable income in your pocket, and you can use that money for other things. We want you to be financially stable and have all the tools that you need to make the best decisions for yourself. So, yes, if you're looking at what your payments are, what you're paying in interest, how mortgages can be 30-year, but there are some 15-year mortgages out there. Depends on where you are and what your plans are, what your goals are. So just think about how much you could save over the life of that loan. So that really could affect your wallet. Some of the next steps to help you, I mean, if you've got some wonderful ideas, please share. I love it. I love it. I love it if you could share. But to help you see improvements, making all your payments on time is probably the number one thing you can do to help yourself. If you don't have to apply for additional credit, I say let your good credit history kind of ride for a little while and see, how that's working for you, help you gain more points on your credit score, pay down those balances. I mentioned earlier with a credit card, if you're borrowing and you want to start paying those things down to help you, number one, get those balances down, which it would be a good thing, to help you pay off some debt sooner, but also to make sure that you're, keeping enough disposable income in your pocket so that you can save for your future. Feel free to do that. If you have lines of credit, say for instance, if you have 10 credit cards You don't need all 10 credit cards, or you don't want all 10 credit cards. That's fine. Don't get rid of your capital. If you want to transfer balances over so that you can keep that. So for instance, if you have two credit cards, one's 2,000, one's 3,000, and you want to combine that onto another credit card and make that balance a little higher, feel free to do that. But if you just eliminate that or close it, then it's going to eliminate the all of that hard work that you have put into it and get rid of that capital. So if you've got $10,000 and you've got two smaller credit cards, 5,000, 3,000, you've got now $15,000 worth of capital. If you close those lines of credit, it's going to drop back down to 10 when you had 15. You can transfer those balances, put it on one credit card so you don't have as many, or roll it over into some other loan that could help you. Say a home loan, if you want to do a home equity line, something of that nature, you can roll it over and keep your capital. That would be helpful. Moving those revolving balances, which is, I went ahead of myself here, to an installment loan if you want to help you get a lower fixed rate. Feel free to do that. We'd love to see what works best for you so that we can help you, get to those goals that you have for your financial life. There's not a right way or a wrong way for everybody. There's not a one size fits all. So let us know what your goals are so that we can put our heads together, see what makes sense for you so that you can get the most bang for your buck, so to speak, and do what's going to work best for your financial life. I tell people all the time, situations change. Like I said, medical bills, divorce, changing jobs, all kinds of stuff happen that you don't always plan, but there's always a way to rebound. So feel free to talk to us, or talk to your financial counselor to make sure that you're doing the things that are going to be in your best interest. Lowering those payments and increasing your available credit. If you are in a situation where the credit card company is saying, you know what, you don't use this credit card anymore, so we're just going to, you know, take it away, and that has happened, that's a good indicator. Let me go ahead and transfer that balance before they get rid of it, because once it's gone, it's going to show that you no longer have that credit history anymore. That is gone. That capital that you have accrued over the years with that credit card, that's going to be gone off of your credit report. So you want to keep what you've earned. So find ways, talk to your financial counselor to find ways to help you keep what you've worked hard for. I've talked a lot. I'm trying to make sure I get it all in at least in 30 minutes. So if anyone has questions, hey, I love having those conversations. So if you want to ask a question or if you want to share, feel free to do that. We'd love to hear from you.